It's our first corporate interaction of the day. Castrol is on our radar. We have seen volatility in crude oil prices because of geopolitical tensions that has impacted the company's quarterly performance. The revenue growth for Q3, they have Q3 of calendar year, has been quite muted while the margins are stable at nearly 23%. Sandeep Sangwan, who's the managing director at Castrol India, joins us now to discuss their quarterly performance. Sandeep, hi, good morning. If you can just start by telling us what exactly was the volume growth that you clocked in this quarter, and can you split the revenue growth for us into, both volumes as well as realizations?
Yeah, so I think, first of all, thanks for having me on your channel. Good morning, everyone. We are very satisfied with the growth that we've seen. Our revenue growth is 6% versus Q3 last year. And on a sequential quarter basis, the Q3 tends to be the lowest quarter that we have historically. It's about 23%. And our volume growth has been double the market growth rate. So our volumes grew at about 8% in the Q3 versus last year. So we're quite happy and we see momentum coming back. And I think the new product launches are gaining good traction. We launched Castrol Auto Care, a range of products which are available in 18,000 outlets now. We launched that in May. We launched a Magnatech SUV variant, which is gaining very good acceptance from consumers and customers. We continue investing in our brand. In fact, in Q3, our investment was at higher levels because we launched a new campaign on commercial vehicles, Badhte Raho Aage. We did a digital media campaign around Bharat GP on the motorcycle division, and we continue making progress on sustainability agenda. So all our small bottles have 30% PCR now. Post-consumer recycled plastic. We've reduced about 1,800 metric tons of carbon. One of our plants is on fully 100% renewable energy now. So I think we're making good progress across all the key strategic areas that we want.
That's fabulous, the move towards sustainability. But just some more numbers. You said you clocked in an 8% volume growth in this quarter. What can you do by the end of the year? Can you get to double-digit growth in the next calendar year?
So I think we see volume momentum coming back, and that's been one of the things that our investors have been always asking us, can you drive the volumes at a much higher level? And that's what we're pushing for. Now, it's very difficult for me to forecast next year, but the intent is to drive top-line growth while holding the margins at about 23%. And that's what we've said as a management team, and we are able to deliver against that.
Right. Sandeep, hi, good morning. What's your market share now in the high 20s?
So I think if you look at the retail automotive market, which is the aftermarket, that's where most of our business is, we are in the 20s.
Okay. Because even, I've been watching all these ads, lubricant engine oil ads on television. I mean, they're all over the place on the World Cup telecast.
Absolutely.
A lot of competition, right? For an industry which is actually growing at about 4%. There's Chevron here. There is, there's Mac, which is the public sector sort of company, and there are others as well. So, what does it mean, this level of competition for a market which is not growing very fast? You are doing much better, but do you think it'll impede your plans?
So first of all, we used to having good competition, and good competition always challenges us to do better. Fine. The other thing where you see so many brands and becoming active in India is because India is going to be one of the lubricants market that will continue growing well into the late 30s, given the low penetration of cars. And that's why you see a lot more competition, even international brands coming to India. And we are fully cognizant of that. And that's why we continue investing in our brands, and also continuing to scale up our distribution efforts. We are the largest distributed lubricants brand in the country. We cover almost 100,000 plus outlets. And now we're beginning to make a push in the semi-urban and rural areas to continue on that growth trajectory. So good competition is always welcome and challenging, keeps us on our toes. So very happy for that.
All right. Hi, Sandeep. Good morning. You said your volume growth was around 8%. That would tell you that pricing is more or less flattish, a little bit lower on a year-on-year basis. We got the margin number as well, but you also briefly mentioned about new launches. New product launches as a percentage of your mix, how much is it? Where do you see this number headed? And what kind of capital expenditure would you be doing for this segment?
Yeah, so typically we have 3 plants in India, and typically we spend our capital both in upgrading and maintenance of our plants, and then we spend other part of capital, which is retail signage and in the retail trade. So typically we spend about anywhere from 80 to 100 crores, and that capital expenditure would continue going forward, and possibly will continue to increase our spending as far as the retail branding is concerned going forward as we expand into rural areas. Sorry, I missed your first question.
The
Can you
new
just remind
products,
me?
the new products as a percentage of your mix.
Yeah, the new products, I think, typically start at about 1-2% of contribution in the first year. But as we see them grow over the years, typically we would want them to start contributing about 4 to 5%. So.
Okay, and what's your balance sheet looking like? If you could give us
So we have a very healthy balance sheet in the sense of we're sitting on cash reserves, which we're looking at opportunities to deploy. So from a balance sheet perspective, we are very comfortable. We are a debt-free company with healthy margins, healthy cash reserves. So that gives us all the capital that we need to drive further growth in the coming years.
All right, we'll let you go on that note. Thanks a lot for joining in. That's Castrol. Quite optimistic, actually. The revenue growth at 6%, volume growth at 8% in this quarter. They're a debt-free company and they hope that the volume momentum continues. But